This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, friends, and welcome to this week's IG Live. Okay, I just want to remind everybody that the best place to get my most recent commentary for free is tawariresearchgroup.com. If you've not signed up there yet, please do. I do a free e-letter. I'm publishing maybe 2 to 3 times a week, sometimes 4 times a week. Look, if there's something interesting to talk about, I'm going to be talking about it. So I strongly recommend that you go to tawariresearchgroup.com and read the articles there. And every now and again, I do give a free pick. Those of you that took advantage of Ethereum that I recommended the week before the ETF got approved, you've done very well. So I'm going to talk about ETH today. I'm going to talk about Bitcoin today. And I'm going to talk about the #1 issue that is really going to hurt you right now and how to avoid it. I'm also going to talk about what is kind of overhanging the market right now and why it's actually a gift. Oh, awesome. So glad that you pulled the trigger on Ethy. Today, I am wearing a Cartier Tank Francais. It is the first and only Cartier I've ever owned or purchased, and it is a lovely watch. Look, in the world of horology that can get ridiculous in terms of price, this is actually pretty reasonable. It is still ridiculous in the everyday world of watches, but in the world of high horology, this is pretty reasonable, and it's just a beautiful watch. And it really could almost be a one watch. You could be one and done with it. It's a lovely piece. Anyway, I could talk about watches for hours, but maybe that'll be for another live session to do. So what I want to talk about is the overhang over the price of Bitcoin right now. I don't know if you saw this, but Mt. Gox just moved $9 billion worth of Bitcoin. Now, for those of you that are relatively new to the Bitcoin ecosystem, Mt. Gox at one point was the largest centralized crypto exchange for Bitcoin, and it got hacked. And those coins, many of those coins were stolen. Some of those coins were recovered. And Mt. Gox has been going through a bankruptcy now for 10 years. 10 years this has been going on. Finally, Mt. Gox has reached the point where they are going to start dispersing the Bitcoin to the end users that have been waiting this long. So that current prices is about $9 billion worth of Bitcoin. That Bitcoin has started to move out of the Mt. Gox bankruptcy trustee wallets. That's the first time they've moved in 5 years. And so the market, of course, sees $9 billion in new supply getting unlocked, and it's nervous, and it makes perfect sense. If you think about it logically, if you're a market maker or if you're a buyer in size of Bitcoin, and $9 billion in new supply is coming to the market, that's been off the market for 10 years, a certain percentage of that is going to hit the bid. You've got people that have had their money tied up for 10 years and have had nothing for 10 years. I mean, that was for many, it was their life savings. They were early believers in Bitcoin. They put all their money in Bitcoin, and they were absolutely right. And the one mistake they made was that they didn't self-custody, and they've been paying the price for it for 10 years. So I would imagine that a good chunk of that 9 billion is going to hit the market. Now, how much? I don't know. It's impossible for me to know. It could be 20%, 30%. It could be as much as 50%, but a bunch is going to hit the market. So you will probably see some weakness ahead of that, and then weakness as those coins start getting distributed to their rightful owners. Now, does this mean that we should clutch our pearls and run for the hills and hide? No, no, it doesn't mean that at all. It means that we want to be opportunistic buyers. So we want to be patient. We know there's 9 billion of supply out there. So there's no real hurry right now. If I was saying, okay, I want to add to my BTC position, I'm saying, you know, let me wait. Again, let me let the game come to me. And I've written about this a couple of times, talked about the levels where you can get long. 62, 52, you know, between 42 and 45. I don't think we're going to get that low, but this is Bitcoin. You can wake up tomorrow and it can be down 40%. It is the nature of the asset. And because so many newer people do not understand that this asset can drop 50% in a day and then triple over the following year, that they automatically make a determination of, oh, if it drops 50% in a day, it's not an asset I can own. Without that double-edged sword of volatility that this asset has, you would not have had and continue to have the ability to make so much money in the asset. You must come to terms with the fact that Bitcoin and all crypto is wildly, wildly volatile. And once you kind of have that moment with yourself, excuse me, my allergies again are just bothering me so much. Once you come to terms with that, and then you tame that volatility through your position sizing, or you take advantage of that volatility by buying on weakness when everybody is everybody's hair's on fire and they're screaming and they're running the other way. That's when you start understanding this asset. That's when this asset becomes a wealth builder for you. The people that hate Bitcoin that have owned it in the past are the people that have bought it on the rally and sold it on the sell-offs. And for those people, this has been a horrible asset. It's an asset they want nothing to do with. All you have to do is invert that approach. When the price is crashing, when nobody wants anything to do with Bitcoin, or when everybody thinks that Bitcoin's going to fall off a cliff into an abyss and never come back, you buy. When Bitcoin is ripping to the moon and everybody thinks it's going to go up forever, you sell. If you're a short-term trader, you buy the dips and you sell the rips. If you're a longer-term player, you're still going to buy the dips, but you're going to play for the bigger move. And again, the bigger move across this cycle, in my opinion, is a minimum of $150,000 Bitcoin. On ETH, I think we're probably going to hit around 10K, maybe more. It depends upon what the flows are like going into the Ethereum ETF. But we are going higher. Are we going higher tomorrow? I don't know. Could we drop 30% tomorrow? Maybe. Could we go up 30% tomorrow? I don't know. But if I look across the cycle of this bull market, which will probably be about 18 months long, we are going higher. Much, much, much higher. Let me say it again, much higher. So I want to talk to you a little bit about some of those drivers that have me so bullish. For years, I've told you that institutional greed by Wall Street will drive the adoption of Bitcoin as an asset that Wall Street will build financial products around. Now, I talked about that in 2017, 2018, 2019, 2020, or all through that period of time. And now we are here. Now we have Bitcoin ETFs. We have an Ethereum ETF that's just about to go through. Once the new laws that are being pushed through the House right now make it through the Senate, we will have a complete regulatory framework for the financialization of crypto assets. What does that mean in English? What it means is that we'll finally have a set of rules and regulations where brokerage firms can create financial products that will take assets that are right now very difficult to buy, like altcoins, and put an equity wrapper, a stock wrapper around it, so you can buy the coin just as easily as you can buy Apple, Microsoft, or in this case, Bitcoin through IBIT and FBTC and things like that. So that is in front of us. That train has left the station. It's happening. There is no one that can stop the financialization of crypto assets. I want you to fully understand that. There is no one that can stop the the financialization of crypto assets. And if that's true, what does that mean? It means that billions, if not trillions of dollars are going to come into this space. And what does that mean for prices? It means they're going to go up, baby. They're going to go up, 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 up. Now, are they going to go up in a straight line? No. Are they going to want to make you vomit on your keyboard every now and again? Yes. That is what they're going to do because it is the nature of the asset. Can you repeat after me? It is the nature of the asset. And I know we're not in the same room together, but let's do it one more time. It is the nature of the asset to be wildly volatile. Your job is to make that volatility work for you and not be victimized by it. My job is to remind you of that all the time because it's really easy to forget. Everybody with me? Yes, yes. Wave, wave. I know we like a bit of interactivity here. Okay, so there are some other things that you need to know about. Corporations, and I've been writing about this since 2020. I wrote that corporations there would be a virtuous cycle would be created and corporations would start adding Bitcoin to their balance sheets because they could issue stock or borrow money at very low rates and then swap that stock or swap that money for a finite asset, which in this case is Bitcoin. So we saw MicroStrategy really be the first company to do that at scale. And if you remember, when I first started doing these lives, I had told you that there was an accounting change that was making it easier for publicly traded companies to add Bitcoin to their balance sheet because they wouldn't be punished for putting it on there. Whereas before, the old rule was if you bought Bitcoin and Bitcoin dropped in value, and even if it subsequently doubled in value from your cost basis, you still had to hold it at the lower valuation. Now, the new rule is you simply hold it at you mark it to market. So whatever that valuation is, if it's doubled in price or if it's down by 50%, whatever that is, you hold it at that market price. So that means that you don't have permanently impaired earnings. And this was critically important for the adoption of Bitcoin by publicly traded companies. So since MicroStrategy got involved over the last few weeks, we've seen this company called Sinclair roll out the same strategy. Stock was up 37% like that. We saw Metaplanet in Japan, I don't even know what this company does. I went to their website. I couldn't tell you what they do. But the stock's up 158% because they are adopting Bitcoin as a treasury asset. And the way this works is, and it's brilliant. And you know, Michael Saylor really is a brilliant guy for figuring this out so early. What he has realized is that he can issue stock and issue low-cost bonds, buy Bitcoin. As the Bitcoin goes up in value, the value of his stock goes up, and then his convertible bonds now convert into stock, so they're not debt anymore. He doesn't have to pay that money back. And because he has a larger market cap and more value, guess what? He can issue more stock, issue more bonds, and buy more Bitcoin and create this virtuous cycle. As long as he keeps the maturity date of his bonds out far enough beyond the next halving, he can pretty much continue to do this forever. Why? Because the supply of Bitcoin is completely inelastic. It doesn't matter how much demand there is. You can't create more Bitcoin beyond its pre-programmed issuance schedule. There's no other asset like that. If you try to run this game on a stock, and this is something that Bill Wong tried to do with his hedge fund with Paramount. He tried to gun the stock up and basically corner the stock. Stock went up to $100, but guess what Shari Redstone did? She issued a ton of shares, diluting the value of the company and crashing the price of the stock to now down to $12. Well, you can't do that with Bitcoin. There's no CEO of Bitcoin that says, oh, hold on a second, you know, the price is getting crazy here. Let's go issue another million Bitcoin. You can't do that. Saylor understands that. These guys at Sinclair understand that. Metaplanet understand that. Now, look at how the adoption cycle of Bitcoin works. First, you kind of get what would be considered fringe people getting involved, and then you kind of get like the smarter early stage investors, and then it just kind of broadens out and broadens out. We're going to see the same thing happen with the adoption of corporate purchases of Bitcoin. First, you have MicroStrategy. Then you have, I had never heard of MicroStrategy before he came out with his plan. Then Sinclair, Metaplanet, I don't know who these companies are. So you're going to have more of these fringe companies adopt this cycle because, again, think of the incentives. They own stock. If you can see your stock go up 40% in a day, 150% in a day, and all you got to do is take the cash from your cash generating business and buy Bitcoin, and you double your net worth, are you going to do it? Yes. This is the beauty of the incentive mechanism. And so larger and larger and larger and larger and larger companies are going to enact this strategy. And it will be a self-referential boom that will be unlike anything we have ever seen before, because we've never seen an asset like Bitcoin before. We've never seen an asset where the whole world wants it, but there's no way to make more of it. So the picture in front of us is wildly bullish. And I'll say it again, even with all of that in front of us, this asset can drop 30% like that for no reason. For no reason. Why? Because it's the nature of the asset. And thank goodness it's the nature of the asset, because that gives us the ability to make an enormous amount of money from this asset. Okay, so I want to just close talking about what I believe will be your biggest enemy this year. Your biggest enemy this year is going to be boredom. It's going to be boredom. I mean, I'm looking at the chart right now. Since March of this year, so March, April, May, June, we're just about in June, 4 months, we've just gone sideways. It's boring. And when things get boring, we have a tendency to do really dumb things like overtrade, cash in our primary position and say, oh, well, you know what, I'm just going to try and buy it back cheaper. Overtrade on just crap coins that we shouldn't be putting that much money into. We get bored, and instead of saving the money that we wanted to use in case there was a pullback, we take the money and we use it for something else silly rather than something that's going to build our net worth. I need you to watch out for boredom. Okay, boredom is going to be your biggest enemy this year. If you go back and you look at what the action is like in the year of a halving, you get the big run up, you get a sell off, and you get a lot of sideways chop, And then out of nowhere, you get this explosive move higher. And it's usually later in the year. So friends, what I'm going to ask of you is embrace the boredom. Try not to look at it every day. If you're looking at the prices every day and it's driving you bananas, go do something else. Get outside, go spend some time with your family, go to the gym, read a book, watch Netflix. Just do something that is not going to damage you financially. That's all I ask. All right, friends, any questions in closing? When would you suggest buying ETH? Back on May 13th when I recommended it. Do you think the sideways movement is highly correlated to Fed interest rates? No, but the market can think that. So if I can tell you when that would matter to me. So the market believes that interest rates are a fundamental underpinning of the valuation of Bitcoin. I do not. But because the market feels that way, if we would get a spike in rates, Bitcoin would drop, and that would be a buying opportunity. The bigger driving picture, or the bigger driver behind, in my opinion, Bitcoin's value, is the continued engagement of quantitative easing, which we are undergoing kind of stealth quantitative easing, and massive federal budget deficits. We're running a $2 trillion deficit in an economy that has full employment. We're not at war. We have no recession. That's insane. And that guarantees that the buying power of our dollars are going to be debased. Again, I believe this is going to be a decade of debasement. And the best way to protect our wealth and grow our wealth during a period of rapid debasement is to own finite assets. And the best finite asset in the world, in my opinion, is Bitcoin. Okay, do you think staking is a risk? I do think staking is a risk. You have to go into staking with your eyes open. I would never stake my whole stack. And in fact, I don't stake any of my Ethereum right now. That's not to say that you shouldn't do it. I know friends of mine that stake tens of millions of dollars worth of ETH, and they're perfectly fine with it. Okay. Oh, I think you're asking me, do I think staking is at risk? Like, will it be banned? I don't think it'll be banned. I think that the SEC doesn't like it, but I think there's too much money there, and there are too many interests aligned to bringing investors into staking for the SEC to stand in the way of that. Hopefully that answered your question, Melissa. Okay, somebody asking me, I get this question every week about the end game for, once we start taking crypto profits. So what I have suggested, at least for me, when it comes time to take profits, because we've been through enough cycles to know nothing goes to the moon forever. What I intend to do is own very short-term T-bills, maybe 30-day paper, and then just wait for asset prices to come in. I'll always have at least a 5 to 10% allocation to Bitcoin as a long-term inflation hedge. I have much more of my wealth in Bitcoin than that now. And then what I intend to do when I do take profits is to hang out in very short-term bonds, bills rather, and then look to buy back in assets on the cheap, which will be a combination of probably Bitcoin, real estate, and equities. Yeah, so the question is, when do I think the bull market ends? This is always a very difficult question, but it's generally 18 months after the halving. This bull market might go on a little bit longer because we have so much more money coming into the space than we've ever had before, and we've got rid of the fraudsters. So, what has always killed the bull market in the past has been just terrible fraudsters in the space. So we've done a really good job eliminating them, and the adults are really in the room here. But I don't worry about Coinbase going out of business. I don't worry about Fidelity going out of business. I don't worry about BlackRock going out of business. So these companies are now the largest holders of Bitcoin. So that's very different from unregulated offshore exchanges like Mt. Gox and FTX that we had to rely on in the past. Do I think the Mt. Gox distribution will bring the price of Bitcoin down? Yes. I just don't know by how much. Okay. Should I trade Bitcoin with puts and calls? I mean, I can't answer that question. Maybe you're a genius at trading options. So that's a very personal question. For me, how can I put this delicately? I don't think you need to be that smart to make a lot of money. Just buy Bitcoin, bet on the financial incentives, leave it alone, and you're going to make a ton of money. If you're going to play around with puts and calls and you're not an expert, do it for small money first. Do it one contract at a time and make sure that your risk is capped and get some experience. Do I think there will be money printing end of 2024? Well, there's money printing going on right now. It's just more of kind of secret money printing. The fact that the Federal Reserve has slowed down its quantitative tightening is it's not money printing, but it's certainly a form of money easing. But yes, there has to be more money printing ahead, and I'll tell you why. because the tax base cannot keep up with the current rate of spending. And so when there's a gap between how much you have coming in and how much you have going out, you got to print more to fill that gap. And that's exactly what's going to happen. We were replaced the USA dollar. I'm not sure what you're saying there. I can't advise you exactly on staking. I've had staking services before, and we've always been very clear about risk management with staking. There's always a risk with staking because you have smart contract risk. So for the core stack, I've never been a fan of staking the core stack. For the trading stack or for the smaller stack, with some of the altcoins that we've been involved with before that have staking, yeah, I think that makes sense, because we're not talking about huge dollars. We're not talking about the potentially putting at risk the life-changing portion of your investment portfolio. So I think you just have to really use a lot of common sense. What coin will replace our dollar? You see, I'm not a believer that the dollar is going to be replaced. I think the dollar will just continue declining in relative value. But you have to remember that the dollar is, think of a room full of unhealthy people, and that room is currencies. The dollar is the healthiest unhealthy person in a room full of unhealthy people, which is why the adoption of the dollar has increased over the last few years by other countries. But relative to Bitcoin, Bitcoin is a world-class athlete compared to the US dollar. But we need the dollar. We need fiat currencies. This idea of the fiat currency is going to go away or the US dollar is going to go away, I've never believed it. I think it's a mistake. Countries need to be able to print money during wars and things of that nature, and they need that level of flexibility. Our job is to make sure that we're insulated against the abuses that take place in a fiat currency system. And that's what real assets like Bitcoin do for us. There's a question here about CBDCs. The House passed a bill banning it. Do I think they could still be a problem in the future? Absolutely. This is something that we have to keep a lot of political pressure on, because CBDCs are just a dream for a totalitarian government. So this is something that our generation coming up behind us, we have to use every piece of influence we have to make sure that America never has a CBDC. I don't think, there's a question here about treasuries and about the dollar, and the dollar will be worthless. I don't think the dollar will be worthless. I think that the dollar will continue losing its buying power. And so none of us should be storing our wealth exclusively in dollars. When I buy short-term treasuries, that's a holding point over the short term for me, waiting for asset prices to get to a compelling value where I will then swap my depreciating dollars for assets, hopefully at a very good valuation that will then appreciate for me. That's the way that I use fiat currency. I keep very little money in fiat currency over the long term. I'm in productive assets. I believe that you do have to have a certain amount of fiat currency in, I use short-term bonds for that as a defense against reversals that can take place in your life. Now, the cost for keeping a lot of cash is high because you have inflation, but the cost of keeping a standing army is high too. But if your borders ever get invaded, that cost becomes an amazing investment. And, as many as you know, I went through a stunning reversal in February that was completely out of the blue. And I really thank goodness that I had enough cash where I could say, okay, this is really unpleasant, but I have the cash defenses to not only get through this, but to thrive. And so cash certainly has a place in the portfolio. It's an expensive defense against uncertainty, but it's an important one. Okay, yes, a question about my new service. My new service will will go live on June 26th. I'm going to be doing a special event June 26th at 8 p.m. Eastern. If you receive my digital asset daily publication, which is at tawariresearchgroup.com, then you are already on the list to be notified of when I launch. So thank you for that question. That wasn't a planted question, by the way. Thanks for bringing that up. Okay, the other thing I want to let you know is that I will be keeping a separate portfolio that will track all the old positions in Palm Beach Confidential. So I know that I've received a lot of emails from you that are saying, hey, T, we're not getting any direction on the old positions. A lot of them are up and we need to know what to do. Excuse me, my poor nose. We need to know what to do. So I want to let you know that I will be keeping you updated. As you become a new member of my news service, I'll have a special portfolio where we do updates on everything that we had in Palm Beach Confidential. Okay, I think that's it for now. All right, friends, I want to thank you so much for tuning in today. I want to thank you so much for these great questions. Again, I'd like you to go to tawariresearchgroup.com, sign up there. It's a free e-letter. That's the best place to go. Okay, friends, again, I want to thank you for tuning in, and I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.